right, so welcome to Game Plan Sunday. Today is April 4, 2021, and we had a pretty interesting week last week. It was a short week because we had Good Friday. Again, it's the Easter holiday, so everybody's kicking and relaxing with the family. Keep in mind the markets will be back open here in the U.S. Tomorrow on the 5th, so be ready. But as we take a look at what occurred over the past week, we had a lot of different events. We had the Archegos debacle, which we'll get into that. We had the Biden's infrastructure bill that took place. We had some pretty good jobs numbers that pulled out the market as well, and we'll cover all those as well. But just take a look here at the S&P 500 index. We were able to tag those new highs in the S&P 500, so we were able to get to 4,019. So it was up 1.14%. So record new highs in the S&P 500. Markets is rallying behind that. We had the NASDAQ, or the composite NASDAQ. Let's see if I can get that pulled in here. Composite NASDAQ, for some odd reason, the ticker isn't working, just under comps. We'll just use this one though. And we can see nice pattern showing up here in the NASDAQ. If we just pull this down here, you guys can see the double bottom print. We've been, calling this out all week in the chat room live on the website, Wallstreet.com. Make sure you subscribe if you haven't already. But we came down to the floor, boom, hit the 618 retracement, boom, hit that floor again. You see that buy trigger right there, the green arrow? It says, hey, get in, get in. And we're up against the 618 again, all right? So we have a trend that's moving up. We have a squeeze up in here, buy triggers on here. And so that is the target up here, to get past this, 14,000 mark. So that's the way the NASDAQ is shaping up. And again, on the week here, it was up 2.6%. This came out of nowhere. NASDAQ's been suffering, but they just popped back last week, which is interesting. And then we take a look here at the Russell. Russell here, hit a pop right down here. It pierced through the 50, but then it snapped back in, and it's still chopping, within that, in that range. The 8 moving average and 20 moving average is like right up in there. But it's also up against the 618, key resistance point. But we have a buy trigger in here. We got momentum that's going up. The stochastics is going up there. We want to see if this is going to be another hurdle for the Russell 2000, or we'll be able to pop. Again, we're right here at this key resistance level. So this thing could pierce through, go through, or it can get rejected and start chopping sideways. The market is real dangerous right now, real choppy right now. It's really hard to call this environment that we're in right now. We'll go over some of that here. But just also taking a look back here at the oil markets. We'll take a look at them. And I got a couple little highlight points that's in here just for markets for myself. Again, this is just the Biden's led up to his presidency, that rally. This is the Texas ice freeze here. And then I'm looking at OPEC, coming in, agreeing to boost their output. So OPEC, they announced, last week that they're going to, boost their output here. And we still got that Goldman Sachs target that's here because we actually hit that target. We went through it and we chopped through it, but we fell underneath it, found support at the 50. Question is, can we get back up here and push through the summertime, which I do believe that's going to take place, but we'll see. But with OPEC and them, putting out oil, that's the deflationary pressure, but is it going to be enough to stop the inflation? We'll have to see, So that is the oil sector. I did forget to hit the Dow Jones for you guys. So the Dow Jones, again, we're right up here. Let me just pull it up here. It looks like it's trying to form a flag right here. It is, right up in the overbought territory. So the question is, will it remain sideways, or would it be, continue its assault higher and to the bull flag there? So it's barely up. It's up, 0.24%. So it's barely up. The dollar, on another note, the dollar is, here we go here. With the dollar, we had the dollar that bounced off of these floors here. And, we call for short-term, upward movement in the dollar. We've been talking about this for weeks here. And we got it. and we actually popped through the 200 moving average. I didn't even think we was going to be able to pop through the 200 moving average, but we did. That's the 200 right here. Okay, so we popped through it. But if you notice here, we do have a sell trigger. It says, hey, this is overbought. And we have, multiple sell triggers in here. We got momentum that's coming down, and it's right up against this 786 retracement right here. Let me clear these charts off a little bit, but you can see how it kind of pops through, gets extended, and now it starts to come back. So we got to see if it's going to hold at 200 as a floor, or is it going to come back under? So that's going to be something that we may be able to get a print on this week in the dollar. That should actually be good for equities, maybe even gold. Gold got smacked up last week. Yeah, gold got smacked up pretty bad last week. Gold was down negative 0.08%. We got this decline all the way down here to this floor. We also hit that floor again. Okay, and when you take a look at stocks hitting these record highs, these stocks are overvalued. They are overpriced. When you take a look at something like gold, who came from $2,000 all the way down here, this is letting me know that this is a good spot to buy. Okay, this is a good a good value here. Okay, this means that gold is relatively cheap. Okay, so I wouldn't be surprised to see smart money wherever that may be, because money hasn't been smart lately. We talk about Archegos Capital and all this other stuff here in a few, but if there's any sound money that's out there, then we'll see gold do what it's supposed to do. So I'm expecting gold to continue to come, to reverse this and to come up higher, at least for the short term, at least. So again, we're looking at what's shaping out to be a double bottom setup. Okay, I know we can get at least to the 100 moving average when we get up there, but perhaps we can get up to the 200 moving average. This resistance zone right here. We do have a squeeze on it as well. So you can check that out. And Bitcoin. So Bitcoin rallied up, rallied up to that 60,000 mark, and Bitcoin is actually looking like a double top actually. So we can see right here at the 127 extension, right? That's a key level extension, which is the opposite of what gold did. So we got to pay attention to this. We see what's happening. Boom, pop, hit that, came to the 618 as a floor. Boom, came back up again. This was last week. So, when gold was selling off, people was buying Bitcoin. So what it's looking like here to me is that Bitcoin may be doing a double top setup, and gold will be doing the inverse, a double bottom setup, which is bullish. So let's see how that all plays out. Again, you can't really tell with Bitcoin because it's a crazy one. But if it's any indication of my technical analysis, that's the way it's looking like. But it is in the squeeze too. So it's in the squeeze, but we can take a look at stochastics here and see, short term, it looks like it's going to come down some. Doesn't mean long term. The trend is still intact. So just keep that in mind. As far as the sectors go, we had the communication sector. They led the past week, at 3.17%. We had technology sector came in number 2 spot at 2.12%. And we had the consumer discretionary at 2.02%. What was interesting is we saw consumer staples fall negative 0.87% last week. We're expecting consumer staples to pop, people coming out shopping and spending more. Expect those to, be going up more. But instead, we saw the reverse. We also saw the reverse for, healthcare that was down negative 0.54% and materials negative 0.25%. So that's pretty much what the charts are looking like. But the big blow for the markets to start the week off before Biden's infrastructure situation was Archegos Capital management debacle. So we saw another hedge fund get destroyed here, but this one wasn't a short squeeze, unlike the Melvin Capital situation with GameStop. So this whole situation with the Archegos, if I can actually pull it up on the website here for you guys. Let's see here. So we have a couple of different There we go, right here. Archegos Collapse, right here on the news feed, for you guys to see. Where we basically have Bill Hwang. This guy here has a family office. The whole story reminds me of the TV show Billions. I haven't watched it for many years, but I recently watched it. I just finished it last month, actually. So it's fresh off the brain. Shout out to Topaz and Mark for forcing me to watch it. So I finally watched it. It's good for entertainment purposes, but you can learn some things also. And, you know, the writers, these people are insiders. They don't make up these stories, you know, out the top of their dome. They know from experience, you know, this is how it really goes down. You just see it in the entertainment context, but it really happens. And so we're actually seeing one of those situations here with Archegos Capital, when we had this guy, Bill Hwang. And again, if you watch Billions, then you can relate. You understand when they was trying to get Bobby Axel, you know, they was trying to, you know, the guy, the regulator who was trying to get Bobby Axelrod knocked out of his hedge fund down to a family office. So it was like, hey, the worst thing that can happen to you, man, you just run a family office. You can't manage other people's money. You just, you know, run your family office, and you can build back up from there. But this guy, Bill Hwang, from Archegos Capital, you know, that's pretty much like what happened to him. But this guy here, if you guys don't know, Julian Robertson and the Tiger Management, Tiger Capital, these guys are beast mode, okay? I'm talking top of the line elite, okay? And this guy here, Hwang here, he comes from that umbrella. And so they call him a baby tiger, basically, a tiger cub, if you will. So to be a tiger cub, I mean, you're top notch. You're not a dummy. We're not talking dumb money. We're talking about super smart money. This guy knows what the hell he's doing. He's the best of the best. You feel me? But he got smacked up. And he lost his license. So he had to go down to a family office. So he goes down to his family office. Now he starts to manage his own money, you know, the way that a hedge fund guy would do, right? So it's kind of like you taking any of the famous hedge fund guys, taking their license away, and they got to manage their own money. Well, they're going to do what they do, right? They got the intelligence and all that stuff. So that's what they do, manage money. So this guy took his own money, $200 million, and flipped it to like 10 billion. All right. I'm not talking about a small fry. The guy is good in the streets, you feel me? I'm talking Wall Street streets, okay? But, you know, when the regulators came down on him, you know, he got hit with those charges and everything. He was hot. You know, it's kind of like your homeboy coming from the pen. He's like, yo, you know, you fresh. You know, I don't want to be around you. You feel me? He trying to, you know, score a couple of, you know, spots from you, a couple of zones or whatever. And he's like, nah, I can't deal with you right now. You hot, man. Like, give it some time. Let the smoke blow over, and I might holler back at you. So that's kind of what happened with Bill Hwang here. Nobody wanted to deal with the guy, you know, because he was hot, but gave it a couple years, and then he was back in there in their blessings, right? So then these banks, they started, funding this money, giving him this money, giving all this margin, all this debt. And they would take the risk. They were taking the risk on the guy because the guy knows what he's doing, okay? And so that's what he did. He flipped all this money. Now, you got to understand that, you know, with all these regulations that came in, banks, they're not making money the way they used to make money. You know, what interest rates being super suppressed. I mean, I used to work for, you know, this one lady, and she was telling me how, you know, in the insurance industry, you know, they were under Obama years, they were really upset, you know, because they couldn't make any money with low interest rates, you know. And they were telling me how that what took them 7 years to turn profit for a customer now takes 12 years. And that's one of the reasons they were really upset under Obama years. I don't think it had anything to do with Obama. It's really the feds. But still, you know, you just recognize the president under the times. But with interest rates being that low, they can't make no money, right? And so they had to put on risk. And that's what we're seeing right now. A lot of risky activity, you know, wouldn't be surprised. We see more hedge funds start to blow up, you know, because they're taking on all this risk. And like they say, money is cheap right now. So that's what you do. You're going to, you know, go borrow all the money you can. It's free, basically. It's, you know, 0% interest rates, basically. And so that's what this guy did. He levered up, you know, he got so much leverage. I mean, this guy levered up to the T. You feel me? Like, he just went, you know, balls to the walls with it. But at the same time, you're talking about a guy who's been doing this for like 8 to 9 years, right? So he's habitual, okay? It's not that he's dumb. This is super smart money. We're talking about a baby tiger here, okay? Tiger cub, right? The guy is super smart, right? He knows what he's doing, but he's balls to the walls with it. You feel me? And he was, you know, caking for like 8, 9 years. In fact, they're saying this guy's This guy was yielding like 50 to 70% a year. Okay. So 50 to 70% in a year, where everybody else getting like 8 to 10% a year in the markets, this guy is, top of the line. So, he killing it. You feel me? And yeah, it basically all kind of, collapsed on him. This past week here, or the week prior, we're starting to see the collapse, unfold even more, because a lot of banks, they're in bed with the guy. So all these banks are in bed with the guy. They're funding some of his trades. Super smart though. He did his trades through these swaps so he can hide his identity, right? Because he don't want nobody, he moving, right? He moving. He doing these swaps. He doing all kind of different, financial engineering. And that's why I say, the financial markets are so convoluted. Many people don't understand it. I'm still even trying to learn some of it, right? So these guys, he's able to make his moves without people knowing that it's him. Which is very interesting, because, for this guy to be able to get away with this type of activity for 8-9 years, caking super hard, 200 million to what, 20 billion or whatever, 10, 20 billion. Like, that's crazy money. You feel me? Now the banks, they're not making any money, but they do make money from the fees. The fees that they charge is what they, so they front him the money, because the more money he make, the more fees they collecting. So they all in the game and all in the bed with the guy. We had a margin call. Okay. And so this whole margin situation, take a look at some of these positions here. All right. This guy was caked up. He had positions in Viacom, right? So you take a look at Viacom. This is what happened. All right. Death. Bingo. All right. Michael Myers. Stab, stab, knife, knife, kill, kill. You feel me? He was rocking out with that. Okay. He was rocking out with, who else he had? He had Tencent. Okay. This wasn't too bad, but you can see how, they've been losing. Okay. They've been losing. Who else was he rocking out with? This guy was rocking out with, let's see, Discovery. Bingo. They caught the Jason Voorhees. Boom. Death. All right. He was also playing around with Farfetch. FTCH. Not too bad, but you can see the decline in there. Losing lots of money. All right. And then let's see, IQ. Here we go right here. Right? He caught the Thanos right there. That's a Thanos. Snap the finger, everybody dead. Right? He caught the Thanos on that one. That was crazy. So this guy got smacked up crazy. The banks called like, hey, you need to put some more money on the accounts. He ain't got it. So, they had to pull the plug on him. The story leaked. All these banks are trying to get the hell out. I know a lot of them lost a lot of money. They're saying this guy's on the hook for over $100 billion. Okay. $100 billion right here. Okay. Yeah. 100 billion. All right. That's enough to make somebody want to jump off a building. Okay. Can't imagine him losing 100 billion. He don't even have 100 billion. Shoot, Bill Gates don't even have 100 billion. So this guy's done. All that money he's been making, he done lost everything. We're talking about wipe out. Yeah, he got wiped out. So anyway, we got a couple interesting, articles on the website for you guys to check out with this Archegos Capital situation here. The question remains is, this guy who's, elite, okay? He makes, a costly mistake like this, which I don't really think it was a mistake. Again, when we take a look, if you watch the show Billions, they do it all the time. They set each other up. They be, murking each other off, basically. And my hypothesis is that somebody discovered his movement, all right? Because you got to think, this guy, he's been hiding his movements, okay, in these swaps, okay? And this is some very, trend line here where it's almost damn near illegal, okay? There was another company that got smacked up from this being illegal, but for this guy, he was doing illegal. But I think that maybe, some of the other big dogs out there was like, hey, what happened to Bill Hwang? You remember what happened to him? Yeah, let's take a look, see what he got going on. see this guy movement. Like, yo, can you believe this guy's balls to the walls right now? $100 billion. Somebody probably did a calculation. Like, well, he ain't got $100 billion. Let's route his position, and that's probably what happened. I mean, I don't really know, but I don't think anybody quite knows yet. It's still unfolding as we are speaking. So definitely very interesting things there. All right. And then on top of that, we did have the Biden infrastructure bill. We'll talk about that real quick, and then I get over to the other economic data here. So Biden's infrastructure bill that came through, where he made his proposal, and basically with the infrastructure bill is $2.3 trillion over 10 years, supposed to be for roads and bridges, broadband access, semiconductor research and development, and clean energy. Basically, it's supposed to be, this whole clean energy, Green New Deal situation, where they're trying to, reimagine society and make this society all clean and all this other crazy stuff. So, if there's a clean, then there's got to be a dirty. So, when they say clean, it makes everything else bad because it makes other things dirty. Anyway, it's all political type stuff. But in order for them to roll this stuff out, they basically got to kill industries that work, kill industries that work, coal industry work. Again, fossil fuels work. It's cheap. It's, you got access to it. It's easier to maneuver these things, when you take a look at even electrical vehicles, that's still not there yet. Okay. If I want to go travel or go see family members across, California, anywhere, I can't just, fuel my car. I got to stay overnight, let the batteries charge up. It's very inconvenient. So the free markets has a way of dealing with all of this, right? The free markets, people will continue to buy these cars, but the government is trying to direct the markets and incentivize, you get all these incentives and stuff like that to go get a Tesla electric vehicle or whatever the case may be. Even solar roofs, I saw a commercial earlier, homes in your area, if you get solar panels, the government give you all these, tax write-offs and all this other stuff. They're trying to curb, the economy here. But this infrastructure bill was interesting. I actually listened to the speech that Biden did, and all I heard was what I heard is that he's going to be funneling money through the unions, lots of money through the unions, and hoping that the unions is going to bring jobs back. I mean, that's basically what I heard. And I just can't see that being the case. We take a look at the data, and, we can see that unions have been falling off the map since 1983. Membership in unions have been falling off the map since 1983. If I had to show you the chart looks like this. Okay. People are not joining these unions like that. You got the union dues, union fees. There's a lot of stuff that go with these unions. Now, there are some people that like the unions. I got a guy that's out in New York. He makes really good money through the union. He don't want to move down south because he's afraid of losing his union benefits, right? Because I got the union benefits. And so the union is like a mob, it benefits only those people that's in the union. Okay. But, they try to make it out like, oh, the union is helping the poor. No, the union is not helping the poor. There's not one poor person that's in the damn union. Okay. Many people that's in the union, they make good money. They're not poor. So anyway, but the union is basically a very anti-competitive, entity. Okay. It destroys competitions, from other business people, business owners trying to compete. You can't compete against the union. There's like corporate nepotism. They got so many special guidelines and protections from the government. They're protected from competition. And it's costly. Nobody likes to deal with the union. Okay. So, but, even in the free market, you're seeing people don't even want to go with the union. So that's interesting that Biden, is planning on funneling all this money through the unions and hopes that it's going to create, job creation. I just can't see it. I don't see it. It hasn't been happening. But, they're trying to, force this economy to, whatever they got, their agenda. And so we see that. I see that the Republicans are going to, definitely reject this, what's it called, American Jobs Plan that he has going on, this infrastructure bill, because they're stating that only 6% of the money is going to roads and bridges. So where is all the other money going to? Again, this could possibly be catastrophic, or it could be good. It might work out. I just don't quite see it. When I take a look at these numbers, I don't quite see it. I'm still not seeing a bill that looks like it can get things popping again. But, we'll see. First thing first, the bill got to get passed. And so I'm pretty sure it probably passed, but, it may not. So we still got to see, that's what's happening on that front. The ship that was in the Suez Canal got moved out of the damn way last week. That was a good start to the week. So we can get this supply in the markets to try to catch up with demand, which I'm pretty sure it's not. It's really inflationary, but that was a positive thing on the markets. We did have the other situation with the Major League Baseball pulling out of Georgia, which was, really interesting. And that whole situation, it's, this corporate environment that we're in. I talked about it a couple of weeks back with the LGBT stuff and, all this other, stuff that these corporations are on, and nobody wants to be on the other end. It used to be in corporate America that you didn't talk politics, right? You didn't, you're in the office, you can't talk politics because people get crazy about politics, right? You can't talk about, all these different things that are controversial. Go to work and go to work, right? That's what your bosses want. They don't want y'all fighting in your cubicles and all that stuff about Trump, Biden, or whoever. So it's like, hey, just keep that, out of here. But meanwhile, the corporations themselves, they are taking sides. And I think that's worrisome about the future of, this society that we're in now, where we have corporations that are, acting as arms of the government and using their capital to, create, all kind of, problems in the markets in the name of whatever justice or whatever, goods they have. Listen, man. Listen, everybody does not believe in the same thing, and that's perfectly fine. Okay? Not everybody believe in God. Not everybody believe, and this is Easter, right? So not everybody believe in Jesus. Not everybody believe in Muhammad or Buddha, or some people believe in all kind of stuff. Some people believe in the devil. Okay, so that's why when you talk about what's just, it's hard, right? Because who's just, right? Who gets to determine what is just? Okay, so the leaders of these organizations, you don't know what they believe. They don't put it out there because they know it's controversial. If you found out what they really believe, you probably wouldn't follow them anymore. You probably curse them out. You probably, all these other things, right? And so, it's at a place now where these corporations are shutting everything down. They're shutting people up, and they have even more power now with this computer artificial intelligence world that we live in, where a lot of traffic, people on the web all the time. In the natural world, they can't control certain aspects of society, but in the artificial world, it is complete control. And that's a very, very big problem. But anyway, on that note, I know that Trump came out, he was talking junk about the Major League Baseball, turning their decision away. I know that the governor was saying that they pulled out $100 million. They lost $100 million for them pulling out, over, this whole voting situation in Georgia. And from my understanding, basically they want people to have IDs when they vote. I don't see a problem with it. I use ID when I vote. I took my daughter as a first year voting. We use IDs. I don't see any problem with it, but I do have a problem with them, saying that black people are upset about, not, having to use the IDs as if black people don't have IDs. Black people got IDs just like white people and just like any other person out there that's legal. We all got IDs. We need IDs to have bank accounts. You need IDs to get on a plane. You need IDs for everything. So when it comes to voting, black people got IDs. So I don't see any reason why we would be upset about having to show our ID just to go vote. I did it. And so not a biggie, So that's interesting. But I know that Trump came out, he was talking about boycotting companies, Coca-Cola, Delta Airlines, JP Morgan, Viacom, which you ain't even got to, protest them because we just saw him, getting blowed up. Citigroup, Cisco, UPS, and Merck. He's, basically telling Republicans to boycott them. Now, whether people boycott them, or not, that's something we have to see. I don't know if they're going to do that, but that'd be interesting to see if, the Republicans do such a thing. I don't know if they will, but that can have a negative impact on those stocks. So again, that's Coca-Cola, Delta, JP Morgan, Viacom, Citi, Cisco, UPS, and Merck. Because these corporations, they're picking sides, they're playing politics instead of focusing on delivering value to society. But that's what the government want them to do. They want them to use their influence over the population. See, I don't like that. You have to let society, let people do what they do, and you do what you do. Your job as a business is to deliver value, okay? Not to play politics. It's real dangerous because you're always going to offend somebody. Like, you're always going to offend somebody. You can never please everybody, but that's still problematic because that means you have to pick a side. And if your corporation pick a side and they decide that, hey, they're going to fire you because you are voting for the other party, I mean, that's real coercive. That is not, a real democracy. So, yeah, anyway, you got some real crazy political things that's happening there. With that being said, I'll go down through some of the data that we had that came out. We had the PMI numbers that came out. Manufacturing came out last week. And, we can see that it registered 64.7%. Let me actually go over this a little bit because I do want to touch on something. What's consistent in the PMI numbers, we notice they talk about the winter storms in here. The participants are talking about the winter storms really, messed up the supply, right? So we're seeing that late winter storms. You can see that. They are expecting orders to increase. Here we go in the computer and electronics section here. Demand remains strong. Significant supply impacts on raw materials due to Texas freeze. Okay. They're talking about the supply impacts again. Manpower is also a constraint. Hiring new members is a challenge. This is interesting. Okay. This is consistent throughout the whole situation here, is that there are companies that's hiring, but people are not wanting to even go to work. Okay. You got to ask why. That's when we get into the economics of these things. But they said manpower is also a constraint. Hiring new members is a challenge. Okay. More winter storm situation. Okay. A lack of qualified machine and fabrication shop talent. Okay. A lack of talent. It makes it difficult to keep up with the production demands. So production is up. Demand is up for the production because people are out now. Okay. He said, we have had to provide better compensation to keep qualified talent. Okay, that's inflationary. It means you got to pay higher wages because it's hard for them to keep their talent and to get new talent. Okay, and this is the market's natural way of getting wage increases, which we don't have a problem with that, right? Because you got to let these guys compete. If other companies are paying more, then in the natural markets, people won't be working for these guys, and they need workers to deliver value, so they're going to be forced to raise their wages. Okay. So they can attract, new talent and keep the talent they have. They said that raw material prices are up 50 to 60% over the last 6 months, which results in an increased prices to our customers and a disincentive to build inventory. So they're saying they gotta tax the customers. Things are going up. They got to pass the cost on to customers. This one says widespread supply chain issues. Suppliers are struggling to manage demand and capacity in the face of chronic logistics and labor issues. No end in sight. He's like, this is bad. This guy right here. Yeah. Again, more labor issues. Again, we got somebody that says expect a very healthy growth of manufacturing sales in electrical equipment, appliances, and components. That's a good one. This one here says the business bottomed out in February. We're expecting steady improvement through the end of the year. Inflation and material availability, along with logistics, are major concerns. So he's saying inflation is a concern, material is a concern. And then this guy here talks about the winter storm in Texas. They're having stress on the supply chain. Chemicals are on allocations or unavailable. Okay. Resin is on allocation and unavailable. So that's all inflationary. This is why the market's, still upset about, the Fed's talking about, inflation not being in sight. And pretty much everything we're seeing is inflationary, the distortion in the marketplace. We're seeing that with the lockdown, shutdown of the economy. So they're causing all this distortion. The economy has to try to figure it out naturally, and out comes winners and losers. Okay. We have the jobless numbers that came out here. 719,000. There was an increase of 61,000 unemployment. Let me see if I have something write up on this one here. No, I just left it here. Initial job claims. So they was expecting 675,000 jobless claims. So they expected the number to go down lower, but instead it went higher to 719,000. So more people filing for unemployment. Okay. A staggering number of Americans remain out of work based on the number of claimants across all programs as of mid-March. about 18.2 million individuals were still claiming unemployment benefits of some form, including via the Federal Pandemic Unemployment Assistance and Pandemic Emergency Unemployment Compensation Program, which offers extended benefits to those who have exhausted their regular state insurance. So again, 18.2 million people on some form of unemployment. All right. That is still bad. You wonder why the market's rallying so high. The market is just going berserk over here, right? But in reality, the economy is still weak. You have all these massive amount of people that's, on unemployment. So let's take a look at this one here. Okay, the job numbers came out, 916,000. This is what the markets was all happy about, which, was a positive step in a positive direction here. But you got to remember, we lost a lot of jobs, and these are not new jobs created. These are jobs coming back. Okay, so 916,000 is down by 8.4 million, or 5.5% from its pre-pandemic peak. So almost 9 million short of when we had I guess what they called a healthy economy before the crash. We're still short by 9 million, basically. And so those jobs that were created. Now, you take a look at the jobs that were created. These are the jobs that were like crushed from the lockdown. We have leisure and hospitality, right? Leisure and hospitality was the biggest increase of 280,000. These leisure and hospitality jobs, they're low paying jobs. They're low skilled jobs. They're low paying jobs. They don't stay around. And that's interesting because they brag about the numbers, but you got to really get into the numbers to see what's really taking place. We had, government jobs, public and private, education jobs in here. And then we had construction jobs, which that's a good one, 110,000, which is interesting, with labor costs, lumber going up crazy high. There's a shortage on houses right now, which is interesting. It's a lot of people trying to get houses, but it's a shortage of them. That's inflationary. So now people are not going to be able to even afford these homes. So you go to the charts here. All right, unemployment rate. Okay, you can see that right there. And then the payroll, so the jobs right here came right there. We're right here. Before the pandemic, we were up here. So the question is, do we rally up here and do we continue to go up, or, do we continue sideways? We got to see how that's going to play out. But the infrastructure stuff's supposed to, be something that will, I guess the government trying to create jobs. So that's supposed to be about. So that's, weak data from there. Here go another situation here. You guys can check this out. I just really wanted to highlight one thing in here that was consistent from the PMI numbers that we saw. This guy here says, one fabricated metal company quoted in the report says, a lack of qualified machine and fabrication shop talent has made it hard to keep up with demand. Okay. Many employers see a mismatch between those now out of work and the jobs in their plants. Okay, he says, it isn't Home Depot or Starbucks or a hotel, said Kevin Kelly, chief executive of Emerald Packaging in Union City. He estimated 1 in 5 new workers quit within days and complain about the environment. So this may explain we're seeing high jobs numbers going up, but unemployment numbers are still going up, because it's kind of like, well, why is that happening? Again, in praxeology, Austrian economics, we really get into, the cause and causality of things. These other guys, they're just looking at numbers as if the numbers really, tell you anything. You got to interpret the numbers or the cause of the numbers, right? And so trying to make sense out of what's happening here, we could see this, heavy through the economy. We just saw that in the PMI numbers. And we see this in this guy's number here as well. He's saying that they're having a job boom, but people are not showing up. You see, he said right here in this paragraph, he said he's paying people from $19 to $24 an hour right here. He said people talk about the oil boom in the Dakotas, how workers will get in their car and drive out to get jobs. He said we had the same thing here, a jobs boom, but nobody's coming. So the unemployment that they're collecting is better than the jobs. So you're destroying productivity. The government is basically from all this, intervention. So people do not want to go to work. And why would you go to work if you can just collect all kind of money, sitting at the house chilling. You can go to work, get all dirty. You can sit home, cute, watch some TV, play video games, and make more money than you were making before. So this is problematic. These are distortions that the government creates when they intervene. He was saying that they're not used to machines that need to be greased and the smell of things like ink. Emerald produces plastic bags. Okay, this is a company here. And just basically saying that these people, yeah, they're too cute for all of that. They, but these guys, they're hiring, right? He said, we have better luck hiring people who have already worked in the factory. One small print plant just closed near him, and the owner called to ask if he wanted to buy machinery. He sent the manager, who ended up handing out a job application instead. They have so far hired 5 of the other company's employees and are trying to get to more. Yet even with those hires, his company is still short 14. So we see that in the PMI numbers, with labor shortages, and that's problematic. If you don't have enough people to produce the products that you need to keep up with demand, this is all inflationary. So this is the way I see it. Some more articles on Archegos. If you want to learn more about that situation here, you guys can check that out. Fed's low interest rates are subsidizing hedges, gamble implosions. Again, I told you earlier, on the Feds suppress those interest rates artificially. You have, excessive risk taking like we're seeing right now. And, the future is yet to be known. How many other hedge funds are going to blow up in this environment? So an environment is pretty tricky here. And here go the interest rate. Here go the yields right here. Okay, you guys can see this is the yield curve. Fed suppressing that, keeping that super low. We got the rise over here in the 10 years, 1.72. The 30-year, 2.35. Let me actually take you to the spread view. All right, so you can see it right here. Clear as day. Fed's, keeping that thing suppressed, going down, 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 0, and yields are continuously going up here. So, that's the environment we're in now. It makes it very, very tricky to navigate these waters because nobody really knows the outcome is going to be. We know what we're forecasting, but that's the risk. All right. So taking a look here at the stocks. Excuse me. Taking a look at the stocks here. A couple of plays that you guys may want to take a look at will be Google. Again, the NASDAQ. The NASDAQ got a lot of good plays. We saw them. You don't want to be, too exposed in one place. But, this is where the money is moving at. We got some, clear prints in here. Google is looking beautiful right now. So that's a place you want to focus if you want to get some exposure in the NASDAQ. And also Netflix. I think Netflix is also looking good here as well. So we're seeing that starting to bounce off. And then we have Microsoft. Again, all of these are tech stocks, man. Like, you got to pick, you don't pick all of them, but you pick a couple of them, You don't want to be too exposed to the NASDAQ. Snow. And I pulled out Snow here because this right here is a real popular. It's got a lot of activity on it. And this low, again, they just came out this year. They did pop up all the way to this high. And you see they're, back low to like the IPO numbers. And I can see investors wanting to get in here at these numbers here. From 429, you're down, to cut that in half, you're down $236. You got a squeeze in here. So Snow looks like a winner should the NASDAQ continue to go higher. Jumia is another interesting one too. Jumia, we caught this IPO situation a while back, and it's been, doing what it does. It's like the Amazon of Africa, but it has like a double bottom situation right up in here, right? We got that high right there, boom, came up, boom. And so, can we see this thing rally up some more? That's definitely a possibility. Got a buy trigger in here, oversold territory, looking like it's ready to bounce back. So that's something to keep your eye on too, just to find some kind of exposure out of that sector there. Gold, we talked about gold. Barrick Gold has a lot of got some unusual activity on the 21 calls, and it's starting to bounce up here. We got it to basically kind of from this floor, came up to the 50, bounce back down here and look like we're starting to come back up maybe to like the 100 or so. So we see those 21 calls. They're starting to pop. That 21 call is right here at basically around the 50 moving average. So we can see that come up too. So we'll see how that plays out. What else I got? Let's see. Activision was another one of those, stocks we've been playing in the chat room. Boom, down here to the 100. Boom, boom, right? So it's like a triple bottom setup here. Okay, you had a buy trigger that's right up in there. I said we get at least to the 618. But there's lots of plays that's in the markets here. You guys can check out. I'll do one more. Lift. So Lift is in a squeeze. Bingo. We got the squeeze here. Stochastic switching upwards. Buy trigger that's right up in there. Swing high to that low. Up against the 618 right here. So we got to see if we can push through with a $70 target. So I think that we could do that with this kind of setup us on Lift. And so that'll give you guys a couple of situations to play, for this week, or at least keep your eyes on those. The markets will be open tomorrow, but the global markets are going to be closed. So I think Germany, the UK, they're going to be closed, but the New York Stock Exchange and the NASDAQ, they're going to be open. We got the International Monetary Fund, the IMF, and the World Bank. They're going to be holding a spring meeting tomorrow all the way through Sunday, April 11. We got the ISM service numbers going to be coming out tomorrow. The economists are forecasting a 58.5 reading. So that, again, that's, they're expecting that to continue to go. Tuesday, we got the BLS job openings and labor turnover survey for February. Wednesday, we got the FOMC minutes. So the Fed's minutes meeting, and then Powell give a speech on Wednesday. So keep your eyes open for that. And again, the SLR situation last week was a non-event. We were actually anticipating seeing what was going to happen in the markets. And I haven't heard anything. Nobody even said anything, didn't see any kind of news articles, anything. So I imagine that they just let the SLR expire. So we're going to have to see how that's going to play out in the markets here soon. We got consumer credit data that's going to be coming out from February from the Federal Reserve, also on Wednesday. And then on Thursday, we'll have the initial job claims from the Department of Labor. And then on Friday, we had the BLS report, the PPI numbers. So that's the economic data that'll be coming out this week coming up. But yeah, so with that being said, we'll go ahead and get ready to wrap the session up. But I did want to show you guys something right here on our newsfeed on the website, Wallstreet Jackboyz. I don't know if you guys know it or not, but when you're doing your research, again, the website is your friend. So you have this search feed. You can search the news feed for whatever you're looking to do studies on, okay? You always got the magnifying glass. You can search things here, but this is the search feed. So I just wanted to let you know that you can just type in whatever term you're doing some research on or whatever you want to know about. If you miss something, you could just go in and just put that in there. Like I'll just go and type in SLR, since I know we were just talking about that, and see if I can pull anything. And bingo, we'll see the news feed will update, and any information dealing with the SLR, you guys can actually see that, read that, do your research on it. So yeah, play around with that. It's right here on the website, wallstreetjackboyz.com. And yeah, definitely check that out. But with that being said, we'll bring the session to a close, and I'll catch you guys in the markets tomorrow. You have a good night. Peace.